Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame higher degree impulsive structure, where we're looking for a 5-wave move towards the upside, where currently we are ranging against the 2.618 trend-based fib extension taken from the low to the high of 1 to the low of wave 2. If we can pass the 2.618, we'd be looking for the 3 at 45.2k and then the 3.618 at 46.9k. But before we get there, we do have some additional resistance, which is the box over here in gold between 45.2k and 46k. Just above that golden box, however, we have some important resistance, and it is quite rare to get that resistance. That is a yearly level at 46.2k. If we go to the yearly chart here, the 12-month chart, then this here is the yearly level. It is the close of 2021 and then the open of 2022. And because 2022 closed below the end of 2021, we got a yearly resistance level here. Now, having a yearly level in general on the chart is very rare, as you can imagine. So I'm very curious how price is going to react around that level. And over here, it is important resistance at 46.2k, with a monthly in between at 45.5k. Now, after some resistance, we eventually expect wave 3 to be in and looking for a 4 to the downside. And the main reason why for me this yellow wave 3 is not yet in is because of the volume as well. If we look at this move to the upside, volume has been increasing as price has been moving towards the upside, and currently the highest amount of volume is in the high over here. So preferably on a lower degree Elliott wave count, which I'll show in a second, we have a 1, 2, 3 looking for eventually a 4 and then a 5 on a bit of lower volume. Then we do expect a retrace to the downside in a 4 and then a wave 5 to the upside. Now currently with a fibs taken from the low of 2 to the high that we have at the moment, the support area for a yellow wave 4 would be between 43k and 40k, with the invalidation at 39.9k. If we then go to the sub-degree count of this wave 3, because inside wave 3 we're also looking for a 5-wave structure, we have to look for this white count over here, where we have a 1, 2, right? And then we're looking for 3, 4, 5. Same thing here. Arguably, wave 3 is already in, potentially here, 4 already in, and your 5 is the high here. But then your wave 5, if that would be the case, here ends on the highest amount of volume in this move to the upside, and that's not really something that I enjoy seeing. So also preferably in this scenario, this would be the high of your white 3, then get a 4, then get a 5 to finish your yellow 3, then go for yellow 4 and then yellow 5 as just shown, because the volume here does play an important role. Now if we do go down for a potential wave 4 in this degree, then this is the support area for the white wave 4, 43.2k to 41.2k, with the invalidation at 40.3k. This one currently is more important than the yellow invalidation and the yellow fibs, because this is a higher degree Elliott wave count. If we then zoom into the local range here, then locally there's two scenarios that I currently keep my eye on. So first of all, we have here the either ABC or WXY. Now what is important on my chart is that this wick does not exist on other charts. So if I go quickly to the Bybit chart here, then you will see that the Bybit chart does not have that crazy wick to the upside, as you can see. So if you pull a fib from this high here to this low, and you put it on the golden pocket, then you can see the 786 has been hit very nicely, right, on this particular chart. If I go to the chart that I have, and I would pull a fib from the high that I have here to the same low, then the golden pocket isn't even hit. So that is also the reason why you don't see any fibs on my chart here at the moment, and I'm just counting. So here we then have in this scenario an A, B and then a wave C to finish an A or W. Now if we have a WXY, wave X most common target is between the 382 to the 886 Fibonacci, taken then from the beginning to the end of A or W. For a wave B, you want to see at least the 0.9 retracement hit taken from the beginning to the end of wave A, because then we're looking for a flat. Because if wave A is a 3-wave structure, we're going to be looking for a 3 and then a 5-wave move to the downside, and an expanding flat is most common, where you then take the high of the beginning of your A. But on my chart that might be a problem, but on Bybit it's easier to take this high and then look for a potential C to the downside. In a WXY, also X can go above the origin of your wave W, so it can take the high, but it's not a requirement. Wave X minimum is usually the 382 Fibonacci and maximum the 886. And if it does go above the high of wave W, we are mainly looking between the 1.236 and the 1.38. Now I'm mentioning these fibs so that you can pull them on your chart with the wicks that you have. After wave B or X, we are then looking for a move to the downside and either wave C or wave Y. Now again, for a wave B, at least the 0.9 retracement should be hit. For wave A, then we can get an impulse to the downside in a flat structure where you expect the low of A to be taken here most commonly. And if we look at a WX and then a Y, well, if this is a W in a zigzag, right, then X can be any corrective structure, but Y in a sideways double combo is not allowed to be a zigzag anymore. So it has to be either a triangle or Y has to be a flat structure, which means you get something like this. But that's at the moment a bit early to call. We first have to wait what price is going to do over here, and it looks unfinished at the moment. So very interesting indeed. And also above price, we have clearly a double top. It's unbelievable that these highs over here did not take the high on the left. It's literally like $1 difference, if not the exact same price. I actually wouldn't know. This is 44,290. This is 44,289. Yeah, so literally $1 difference between the double top that we have over here, and at the bottom we have the 30-minute gap as support, something. So these are the areas that I at least keep an eye on at the moment. It is this candle over here. Price shot to the upside, created a gap on the 30-minute, then we get a red candle and continuation. The low of the red candle is the high of this gap and commonly acts as support, at least for a first time. When it gets hit, then you want to see price move. If it comes back and closes inside, we're going to be looking for price to fill the gap towards the downside. Now, in a potentially more bearish scenario, we have an ABC or a 1, 2, and then 3, 4, 5. Now, an impulse to the downside at the moment is less likely than a corrective structure here, as on the higher degree time frames, right? On the higher time frames, we are looking for an impulse. So we're looking for a wave 4 and then a wave 5. And if you go 1, 2, 3, 4, 5 to much lower prices, wouldn't be good for a wave 4. So we're looking at corrective structures preferably, but the reason I put it on the chart is because in this scenario, your wave A is not a 3-wave structure, it's a 5-wave structure here. So wave A is a 5-waver, which means we also have to put wave 1 on the chart just in case. So we're then looking in the bullish scenario for an ABC, where we have then wave A is already finished, is in. Then we are looking for a wave B, where we have a wave W over here in a flat. Then we are looking for any X, questionable if X finished here or here. And then we're going to be looking for a wave Y to the upside, which, because W is a flat structure in this particular case, Y can be a triangle or a zigzag. Now, eventually, an interesting area is going to be that double top. So potentially one can take the double top and then be looking for a potential move to the downside. Of course, we always have to observe the reaction, because the double top over here is the 786 as just shown on Bybit. So you're going to be very close to the 886 level, which increases probabilities to just continue as well. So going to keep my eye open about what happens here. But in both of these scenarios, right, WXY here or an ABC here, and this one ABC, we are still looking for a continuation of the range in either triangles, or we're going to be looking for a move to the downside in some wave C's right now. If we then look at the CVD divergences, then we do have bullish CVD divergences, which is nice, as the probabilities in like for an impulse are still 4 and then 5, so that's what we like to see. Bullish CVD divergences here, price moving up, coming down, bull CVD, higher low in price, lower low on the CVD. But also with this little order block, which is not an order block on my chart, but it is on the AGGR chart. So here you can see this red candle, little order block, and on blue we have a higher low on price, but look at the blue line, it's just tanking, right? We have a higher low and low, higher low on price, lower low on the CVD. Very interesting indeed. Now on yellow over here we had bullish CVD divergences as well. Higher low in price, lower low in yellow, lower low in blue. So that's a bullish CVD divergence. If it plays out, this is your target. The moment this high is taken, basically the double top, this bullish CVD is neutralized, and then we have to observe the reaction once again. Had a little bit of bearish CVDs over here locally. These already played out. So we had this one here, lower highs on price, higher high on the CVD, maybe on the 5 minute. So over here, this is your high, lower highs on price, but over here, clear higher highs on yellow, bearish CVD divergences, also not on blue actually. So yeah, we had some bearish CVDs here. Continue to observe, of course, what happens locally. And if we then look at the probabilities of the different scenarios, then on the medium time frame and the low time frame, we're still looking for price to look for higher prices, right? To go to higher prices. Also, this high did not hit any relevant resistance in my book, and I do like clear pivot points to be made inside target boxes, like hit a target box and then we get a big turnaround. So another bit of extra confluence for this high to eventually be taken. Look for the yellow box and the yearly as well at 46.2. Low time frame, impulsive structure, right? But don't forget, a wave 4 can still move down a bit as well. No, we have enough room to move to the downside, and arguably we're still in a even lower degree wave 4 as well, which is this one here. I didn't mention it in this particular video, but potentially here we hit the 236. You know, we could still then move for 5, and then that pink 5 is going to be your white 3, so that one is going to move here. But that's something we cover in future videos, depending on the price action that we have on the micro. At the moment, based on what we see here, it looks very corrective to the upside. This does not look like another wave 1, 2 and a big 3, but we always got to observe the reaction. We can take the high on Bybit and other charts in a potential flat A, B, C, so be wary about that one if it does take the high, but then afterwards we would expect a potential new low, or at least a continuation of the range. But after, generally the general probabilities are moved to the upside, right? So the trend is also to the upside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.